Okay, let's dive right into this. Welcome back, everyone. Today, we're opening up the financial and strategic charts of a literal giant in the medical technology space. We're looking at Boston Scientific's second quarter 2026 earnings. Now, if you follow the medtech sector, you already know that keeping a close eye on Boston Scientific tells you a lot. It doesn't just tell you about one company, it really acts as a barometer for the direction of cardiovascular and surgical innovation as a whole. So in this explainer, we're going to look right past the dense, boring spreadsheets. We're going to use the company's own data to figure out exactly what is driving their growth, where they're placing their billion-dollar bets, and honestly, what it all means for the future of healthcare. Let's get started. So here is our game plan for today. We'll be covering 1. The Q2 financial pulse, 2. The anatomy of the revenue, 3. Innovation and strategic bets, and 4. The 2026 prognosis. All right, part 1. The Q2 financial pulse. Top-line revenue. Let's check the vitals. $5.442 billion. Now that is a massive figure to anchor us today. Boston Scientific reported net sales of over $5.4 billion for the quarter. But context is absolutely everything here. Why does the specific number matter so much? Because it represents a highly impressive 7.5% reported growth year over year. Going into this quarter, Boston Scientific had actually provided a guidance range expecting 5.5 to 7.5% growth. So they didn't just casually meet their internal expectations, they blew past the absolute top end of that range. It just proves that their commercial engine is literally firing on all cylinders, even when you factor in a pretty complex global economic environment.
But behind every massive billion-dollar figure is a very human strategy. This quote from CEO Mike Mahoney perfectly grounds these results. He stated, "We are focused on disciplined execution and prioritizing investments in our highest impact opportunities, and we remain confident in Boston Scientific's long-term growth." What you really want to take away from this is that phrase right there, disciplined execution. This massive top-line growth, it isn't just a happy accident or some market fluke. It's the direct result of a management team that is ruthlessly prioritizing exactly where they allocate their capital and resources.
So the crucial point is that this top-line revenue translated beautifully into bottom-line profitability. Just look at the leap in their earnings per share, or EPS. While GAAP EPS jumped up to 61 cents, the adjusted EPS, which let's be honest is the metric Wall Street watches closest, lead from 75 cents a year ago all the way up to 86 cents in Q2 2026. What makes this so incredibly impressive is that their own guidance for adjusted EPS was sitting at a range of 82 to 84 cents. By hitting 86 cents, they comfortably, easily beat their own profitability projections. The vital signs of this business, they're remarkably strong. Moving right along to Section 2, Anatomy of the Revenue, Segment Breakdown.
And this breakdown brilliantly illustrates the macro structure of Boston Scientific. Notice that massive 67% chunk? That's the undisputed heavyweight driving the bulk of that $5.4 billion. The cardiovascular segment, Med-Surg, accounts for the remaining 33%. To truly understand Boston Scientific, you have to understand that it is, first and foremost, a cardiovascular company. That is the engine. But let's look a bit closer at that Med-Surg slice first. It grew a solid 5.9% overall. But when we actually break it apart, we see a really fascinating contrast. On one hand, neuromodulation was an absolute powerhouse, posting a massive 12.7% reported growth. This surge was totally driven by their pain franchise, which includes a really strong full quarter contribution from the recently acquired Nalu, alongside some low double-digit growth in their brain franchise. But contrast that with urology, which kind of just squeaked by with only 1.1% growth. Urology actually faced some underperformance, mainly driven by a slower than anticipated recovery in sacral neuromodulation, plus some real competitive pressures in their stone portfolio, where they have a few key product gaps right now. It's just a great reminder that even in a booming quarter, it's pretty rare for every single division to win simultaneously.
Now, we actually see a very similar story of contrast within their massive cardiovascular segment too, which grew 8.3% overall. Interventional cardiology was completely the star of the show here, delivering a stunning 13.1% reported growth. This was totally fueled by double-digit growth in coronary therapies, and I really want to emphasize the absolute exceptional strength in their agent drug-coated balloon, or DCB. It is massively driving these incredible returns. But right next door, cardiac rhythm management actually shrank by 0.9%. Both their low-voltage and high-voltage products faced declines, once again driven by competitive pressures and some portfolio gaps. So it's a tale of two extremes, really. But the sheer volume and the runaway success of their interventional cardiology unit easily carried the whole segment to an overall win.
All right, Section 3, Innovation and Strategic Bets, Securing Tomorrow.
Now, this is perhaps the single most significant strategic headline from the entire quarter. Boston Scientific is placing a massive $1.5 billion bet on a company called Mirus LLC. For this investment, they are getting roughly a 34% equity stake and, crucially, an exclusive option to acquire Mirus's transcatheter aortic valve replacement, or TAVR, business down the road. The real star of the show here is the investigational Seagull balloon expandable TAVR system. Look, TAVR is one of the most lucrative, fiercely competitive markets in all of medical technology. By making this huge investment right now, Boston Scientific is laying the groundwork for a major future entry into a space that's currently dominated by just a few key rivals. It is a bold, expensive, and highly calculated bet on their long-term growth.
Let's move along and see how this builds, because this aggressive momentum carries right over into electrophysiology. Boston Scientific's pulse field ablation, or PFA, ecosystem is generating massive amounts of clinical data right now. First up, they presented the Avant-Garde study at Heart Rhythm 2026. This demonstrated that their FARAPulse PFA system had clear statistical superiority over traditional antiarrhythmic drugs for patients dealing with persistent atrial fibrillation. Huge win. Then, we had the Elevate PFA feasibility study, showcasing really strong lesion durability for their new FARAFlex mapping and PFA catheter. And importantly here, no reported cases of pulmonary vein stenosis or clinical stroke. Building on that excellent safety profile, they've now commenced enrollment for the pivotal Paradigm clinical trial. This steady, relentless drumbeat of clinical evidence, that is exactly how a company translates innovative tech into dominant market share.
And the regulatory and clinical wins just didn't stop there. Across their whole portfolio, they announced a flurry of other key milestones. The fracture trial met its primary endpoints, showing high rates of procedural success for the Seismic 4C catheter when treating severely calcified coronary artery disease. They also secured FDA clearance for the TrueSelect 2.6 microcatheter to streamline minimally invasive embolization procedures. Oh, and they nabbed another FDA clearance for Revos, which is a really cool first-of-its-kind single device for endoscopic ultrasound biliary drainage. Why does all this matter? Because every single one of these wins is explicitly designed to make complex procedures faster, safer, and much more streamlined for the physician.
Finally, Section 4, the 2026 prognosis. Looking ahead.
The forward guidance here paints a picture of very steady, continued confidence. For the third quarter of 2026, they are projecting 3 to 5% reported sales growth and an adjusted EPS landing between 80 and 82 cents. But zooming out to the full year 2026, the company estimates net sales growth to land between 5.5 and 6.5% on a reported basis, targeting a full-year adjusted EPS of $3.28 up to $3.32. I mean, after a quarter of heavy beats like we just saw, they are maintaining an incredibly robust outlook. They're clearly confident that their core cardiovascular and neuromodulation engines are just going to keep driving strong returns right through the end of the year.
And that brings us to the end of our analysis today. But before we wrap up, I want to leave you with a final thought to ponder. We've seen incredible current performance from them today, absolutely. But when you look at that $1.5 billion investment in Mirus and that exclusive option to acquire a next-generation TAVR system, you really have to wonder, despite their massive size today, is Boston Scientific's biggest era of structural growth still yet to come? It is a fascinating question for anyone watching the medtech space. Thank you so much for joining me on this explainer. Until next time, keep learning and stay focused.